Hi, and welcome to another episode of Monday Market Outlook, and probably another quiet week in the PSEI as we've had some very low volumes in the past few weeks. In the meantime, let's look at some economic news. As we mentioned last week, the inflation estimates for May was from 5.8 to 6.6, and the announcement came in at 6.1. Now, this puts our inflation rate at the same level as the inflation rate back in June 2022. So we've now had 4 months of steep declines in the inflation rate, which is mainly brought about by the softening of commodities prices as well as energy prices. Some good news in the economic front. PESA came out with the announcement of a 14.9 billion investments for May. This brings the total investments at the PESA zone to 48 billion, which is 153% more than the same period last year. So things are really picking up for the Philippine economy. Philippine credit card delinquency rate is also falling, which means a lot of consumers are able to pay off their credit card debts, well, at least the minimum amount due. But on another note, bad loans from banks hits 3.41. This is the highest in 7 months. Is this the effect of higher interest rates? Are we seeing a start of a credit crunch? We'll see how this affects our banking stocks. In the meantime, we have AREIT moving to complete a 22.5 billion acquisition of malls from Ayala Land. This includes Glorieta 1 and 2, both BPO and the mall spaces, as well as One Ayala West and East Tower, and we have Marquee Mall in Pampanga also adding to the portfolio. This will make AREIT the largest REIT in the Philippines, no? And of course, given the strong reopening of the Philippine economy, this really presents a good upside for AREIT earnings, no? And could materialize into higher dividends in the coming years. Also, so the World Bank has raised PH growth forecast to 6% this year, up from 5.6% previous forecast. Again, despite weak external conditions, despite all the recession fears in the US and the slowdown in global economy, our strong domestic demand is driving Philippine growth. Now, the forecast for 2024 and 2025 is at 5.9, which is a slowdown. Let's see if the World Bank decides to adjust its forecast when we see more economic numbers coming in for 2024. In the meantime, amidst all of these good news, the PSEI is currently in a short-term downtrend, which started back in January, right? So the PSEI trying to move up to the next resistance zone here at 6,620. Now, hopefully, the sell-off during Friday last week was a result of an anticipated shortened trading week and a long weekend. So most investors would like to stay liquid every time there's a long weekend. So hopefully, when we come back next week, we will see some market activity that will pick the market up and move us up along this trend line to challenge its next resistance at around 6,600. Right? Now, looking at some stocks here, we have BDO and BPI doing quite well despite the NPL data coming out. Metrobank broke down of its support at 56.40. Now, let's look at how it reacts at 55.25. Now, if we look at previous reactions along these zones, there's a very strong buy demand along 55.25 or 55.15. So we'll see if Metrobank will be able to bounce back from these levels. AREIT again, 32 is a great buy zone for AREIT. With the news of its acquisitions, of course, AREIT has rallied back to 34.50 level. Let's see how AREIT performs in the coming weeks. So again, the PSEI in a bit of an indecision. Let's look at the weekly charts here. The PSEI is in this zone, so apparently we've had a more active zone here at the 6,400 to 6,550 levels. Given all of these positive economic data, there shouldn't be really any reason for the market to show further weakness, right? But you know, as they say, the market can stay irrational longer than you can stay solvent. So let's hope that we can find some catalyst in the coming weeks to bring the market up. So this is currently what traders and investors are really asking. What is the market waiting for? Is the market waiting for rate hikes? Are investors afraid of the market currently because of all of these talk about recessions, right? Because the market seems to be in a capital preservation mode, preferring to hold cash than be involved in a market that may potentially move to the downside? Or is it just bond yields are very attractive right now and that's where investments are going as compared to equities? Let me know if you have some thoughts about what the market is waiting for and put them in the comment section, right? But in the meantime, let's go to the S&P 500. As expected, the S&P 500 has a high probability of challenging 4,300, and it did reach up to around 4,320 before it had a sell-off. Now remember, as we mentioned last week, the S&P 500 has now entered into a bull market, which has led analysts to question whether there's going to be a recession or not, right? So a lot of people were bracing for a recession in 2023, and now it looks like that is not going to happen. It may not even happen in 2024. Now let's look at the situation. Despite all the Fed rate hikes, there's a strong consumer demand, and unexpectedly, the jobs market in the US has stayed resilient despite all the rate hikes. Now, looking into next week, we are waiting for the CPI numbers to come out, which can lead us to how the FOMC might decide on whether to raise interest rates or keep interest rates at 5.25. But as it stands right now, the predictions for interest rate hike has gone down to 29.9%, and 70% of analysts now predict that rates will stay at 5.25. Now that's for June, so that's a temporary pause, because if you look at the July survey, 52% believes that we're going to have another 25 basis points rate hike, and 17% even thinks that the rate hike might even reach up to 50 basis points. But looking at the Fed rate hike cycles and how they fare against history, of the 14 hiking cycles, 11 of those cycles landed in a recession, with only 3 of them with a soft landing. So the question again right now, people are talking about whether we are going to have a recession at all. Hopefully, we can avoid the recession and do a soft landing in 2024. But looking at the bull market right now for the S&P 500, looking at more data, we can see that 1, 2, 3 weeks, even 4 weeks after a bear market ends, the S&P 500 and the Dow Jones has usually retraced. Could we see some consolidation in the markets and some pullback in the coming weeks? But the good news here is that, 1 month, 3 months, 1 year after the bear market ends, the market is usually up even double digit levels. So we'll see where we are by next June. In terms of the American Association of Individual Investors, based on their sentiment votes last June 7, it was a surprising 44.5% bullish vote as compared to 29% last May 31. Now, this surprised a lot of people because the historical averages for a bullish sentiment is just at 37.5. So this is a big increase in the market's bullish sentiment, especially at these critical times. Now, this has put the fear and greed index into the extreme greed zone again, no? So if we look at the chart, is this a situation where we have to be fearful when the markets are greedy, right? Because look at where the market is. It's currently at a very, very critical zone at 4,300. If the market is able to breach that level, we could be looking at the next potential resistance at around 4,380. Now, if you look at the weekly charts here, the S&P 500 was able to stay above this critical zone, 4,280, as compared to its previous rejection at that levels. So there's really a bit more legroom for the market to go up as compared to before. Now, if we look at some stocks here, Tesla, it has been rallying for 4 weeks. Now, if we look at previous rallies here, there's usually a consolidation phase that happens before a sell-off. Now remember, this is a weekly chart. So this is 1, 2, 3, 4, 5 weeks. It took 5 weeks to consolidate. 1, 2, 3 weeks. So are we looking at another 2 or 3 weeks of consolidation before it sells off? Now Nvidia, same case here. A strong move for a couple of weeks and then 1, 2, 3, 4, 5 weeks of consolidation before a sell-off. So are we going to see 1, 2, 3, 4, 5? Are we seeing what, 2 or 3 more weeks of consolidation? Because remember, these outstanding candles is usually a sign of market topping. Now, if we look at the market breadth, if you remember, the market previously had low breadth and that has improved significantly in the past weeks. We are now up at 52%. So we have more than half of the stocks in the market above their 200-day averages. Now, if you look at the sectoral rotation here, 5 days, you can see small banks, consumer discretionary. We are now seeing some defensives entering into the picture: materials, industrials, utilities, right? Finance, real estate. Are we now seeing some of the defensive stocks trying to position themselves? Let's look at the options expirations this week. Now remember, this week is going to be the quad witching week, right? So expect a lot of volatility in the markets. Now let's look at the options expirations for June 16, right? June 16, third week options expirations. Look at the volume here, 5.3 million with the put call ratio of 1.9. Now remember, the put call ratio in the previous week was 3.2. So we're now seeing a lot more calls entering into the options markets. Look at the ranges here, 430, 420, 410. That's a very wide range with maximum pain sitting at 411. Now 430, 420, 410, 411 max pain. If we look back at our S&P 500 chart, 430 sits here, right? So if we adjust this, this is 430 and this is 410. With maximum pain level at 411. Is the market going to go down? It's not a certainty. There are no guarantees here, right? But 68% of the time, the market usually falls in between the put and call walls in the options. So for this week, are we going to see the markets go down? It's not again, it's not guaranteed. We could still see the market make a move up to 4,350 before it eventually fades. It's not guaranteed, even if the options market tells us so. It's not unlikely that the market can test 4,350 and eventually corrects and consolidates in this zone. So we'll see, no? So be careful out there. Usually the quad witching week is a very volatile time in the S&P 500, right? So that's it for this week. Thank you for watching. Please like this video and subscribe to the channel. Good luck on your trades. Please manage your risk accordingly, and I'll see you again next week.